Are you struggling to understand forex charts? Well, your struggle will end in few minutes after watching this video, because in this video I will teach you how to read and analyze forex chart like a pro. Understanding forex chart is very crucial in making smart trading decisions because they are the language of the market and they whisper a whole lot of secrets. Without much being said, let's dive in. Alright, let me quickly outline this video into sections of what you will learn. Section 1, what is a forex chart? Section 2, types of forex chart. Section 3, understanding candlestick chart. Section 4, we'll be talking about identifying key chart elements. Section 5, real-time chart analysis. And section 6, key tips for reading a forex chart. A forex chart is a visual representation of price movements over time for a currency pair. It tells us what has happened in the past and helps us predict what might happen next. Think of it as your map for navigating the forex market. There are three main types of forex charts. We have the line chart, we have the bar chart, and we have the candlestick chart. Now, the line chart is great for viewing the overall trend, but it's not for detailed analysis. Now, we also have the bar chart. The bar chart is great for traders that want a detailed price action at a glance. Each bar shows the opening, the close, the high, and the low. Now, the candlestick. The candlestick is the most powerful and popular chart type. Each candle shows the opening, close, high, and low of price. I'll be dwelling on the candlestick more in this video. I'll go to my screen now. Let me share my screen with you. Let's break down the anatomy of a candlestick. 1, we have the body. Now look at this. This is a bullish candle and this is the body of the candle. For a bullish candle, the body would be white or green. You don't really have to bother about the color. The color is just individual choice or individual preference. So when you see a white candle or a green candle, it means it's a bullish candle and it means it is going up, it is in an uptrend. That's what a white or green candle is. But for me, I prefer using the white color. That's why I say that my candle is white. For some other people, they prefer green. So now, what is a bullish candle? If the price close higher than its open, it is a bullish candle. Look at this, is the opening of this candle. The price open here and it closed here. So whenever the closing price is higher than the opening price, it's a bullish candle. And now this is the wick. Another name for the wick is called shadow. That means when this candle opened, it opened here and it went all the way to this place. This was the highest price the candle went to before it came back down. So this is the high, this is the high, and you see where my cursor is, and this is the low. All right, for the bearish candle, look at, let me enlarge this so you can see it properly. Now, if the price closed lower than its open, it is a bearish candle. And now the color for a bearish candle is red or black, and a bearish candle means it is in a downtrend. So when it is going down, it's a bearish candle. This is the open of a bearish candle. This is the open and this is the close. The price closed lower than its open. Let me use this wick. Let me use a bigger wick for explanation. Now this is the high and this is the low. This is the body, this is the open, and this is the close. Now let me quickly say this. The open of a candle is not really important as the close of the candle. Why? Because a candle can open as a bullish candle and end up closing as a bearish candle, and a candle can also open as a bearish candle and also end up closing as a bullish candle. So what matters is the closing of the candle. So if the price should close higher than its open, it is a bullish candle, and you will see the color there, it's white or green for a bullish candle. And if the price should close lower than its open, we see it there also. The color is going to be red or black, making it a bearish candle. All right, still under understanding candlestick, I'm going to be talking about time frame. I'm going to be talking about time frame. Now, what is time frame? For instance, now this is a 15 minutes time frame, and do you know what it means? It means that if we are in a 15 minutes time frame, it means that for this whole candle to form, it takes 15 minutes. All the candles you are seeing here, it takes them 15 minutes to form. Take this 15 minutes, take this 15 minutes, take this 15 minutes. That's what the time frame means. Now, when you go to the 4-hour time frame, it means it takes 4 hours for a whole candle to form. It takes 4 hours for this to form. It takes 4 hours for this to form. It takes 4 hours for this to form, and so on and so forth. Same with the daily time frame. It takes a whole day. This one day. If I go to this next candle, you can see this Thursday. If I go to this one, you can see this is Wednesday. So each candle takes a day to form. Same thing when you go to the weekly. Each candle takes 1 week to form. That is it. When analyzing Forex charts, there are few key elements you have to understand. There's what we call support and resistance. Let me take you to my screen and show you that. Alright, what is support? Support is where price tends to stop falling. Yes, it acts as floor. Let me show you that. Okay, look at this now. This is a perfect example of support. You can see I'm using my trend line to show you this, to draw this. Yes, look at this. This is a perfect example of support. You can see this price tends to stop falling. You can see price did not break through, price did not fall, price did not fall, price doesn't break through this. So you call this support, and you can see the support level was tested how many times? It was tested 1, it was tested 2, it was tested 3 times, if I'm not mistaken. So you can see this is a perfect example of a support level. Price did not break through this support until this point. So here our support level did not hold again. Price broke through this and it created another support. You can also call this support level. Yeah, it created a temporary support. Yeah, price created another temporary support. So you can also call this a temporary support like that. This is also a support level. Now, all right, let's go to resistance. Resistance is where price tends to stop rising. Yeah, I think this is a perfect example for resistance. Let me draw my trend line. All right, you can see this. This is a perfect resistance. You can see this. Price did not break through this resistance. Hence, you can see resistance is acting as a ceiling. You can see this. Price tested this resistance 1, 2, 3 times before it broke through. It. So when price tends to stop rising, it is called the word resistance, commonly used by retail trader. Alright, still under identifying key chart elements, we have trend lines. Trend line is used by retail trader to determine the overall direction of the market, whether it's in an uptrend or a downtrend. Now, if the market is in an uptrend, they try to use trend line to connect 2 or 3 lows to determine whether it is in an uptrend. And when it is a downtrend, they try to use the trend line to connect 2 highs to determine that it's in a downtrend. Well, that's just what retail traders do, but I'm an ICT trader, and trend lines is not really a core concept in ICT trading. Alright, still under identifying key chart elements, we have a important category to talk about, and it is market phases. Now, basically, the market moves in 3 phases. We have the uptrend, which is a bullish market, and we have the downtrend, which is a bearish market, and we also have the sideways market. Another name for the sideways market is consolidating market. Yes, let me go to my screen and show you all of that. Look at this now. Look at this. It is in an uptrend. This is an uptrend market. Now when the market is making series of higher highs and higher lows, look at this. This is an uptrend market. Why? Because the market is making series of higher highs. We call this higher highs, higher lows. Is higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now this is an uptrend market. Now let's go to downtrend. This is a lower high, this is a lower low, this is a lower high, this is a lower low, this is a lower high, this is a lower low, this is a lower high, and this is a lower low. Don't mind my drawing. The major thing here is that you understand the concept. As you can see, this is an uptrend because the market is making series of what you can see. This is what higher highs, higher lows, this higher highs, higher lows. Alright, this looks like a consolidating market. Yes, the market is consolidating because it is not in an uptrend, neither is it in a downtrend. So you can call this consolidating market. And consolidating market simply means when the market is resting. Yes, so at this point you can call it consolidating market. In an uptrend market, you look for buys because the market is bullish. The market is creating series of higher highs and higher lows. But in a bearish market, which is a downtrend market, you look for sells because the market is creating series of lower highs and lower lows. Understanding the phases of this market help you know when to enter and exit. What do you do in an uptrend? You look for buys. What do you do in a downtrend? You look for sells. And what do you do in a consolidating market? You stay out of a consolidating market because at that point the market is resting. So, and you don't know which way it will take after that. So it's best to stay out of a consolidating market. Just wait for a breakout, then you follow the trend. Alright, let's go to a GPP, JPY 1 hour chart and analyze it, whether it's an uptrend or a downtrend. And also let's try to mark support levels and resistance level. Look at this GPP JPY 1 hour chart. As you can see, the current trend here is a what? Down trend. As you can see, this is a downtrend. So retail traders do use trend line, but I don't use trend line. You can see. If you actually use trend line, and say this is a downtrend, basically used by retail traders. Alright, let's go to the 15-minute time frame and identify the overall trend. The current trend here, this is an uptrend. You can see this is a consolidating market. This particular phase, this is a sideways market. This is also a consolidating market. After it consolidated, the market went into an uptrend. As you can see, this is an uptrend. This is an uptrend. You can call this resistance. See, you can call this resistance. That's all for section 5. Alright, before we wrap up, here are a few pro tips. 1. Keep it simple. Don't overwhelm yourself with too much indicators. Focus on price action first. Number 2. Use multiple time frame. Check the higher time frame for the bigger picture and then the lower time frame for precise entry. Higher time frame can mean from the 4-hour, the daily, and the weekly time frame, while the lower time frame can mean from the 1 hour time frame, the 30 minutes, 15 minutes, and 5 minutes downward. Number 3, practice. Practice on a demo account. The more you practice, the more better you become in understanding and analyzing Forex charts. If you find this video helpful, make sure to subscribe for more trading tips. Until next time, see you in my next video. Keep studying the charts. See you.